Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. I know it's been a while, guys. I haven't dropped a video in a while, but I hope this makes up for it. This is a gem I'm about to give you guys. I know you guys will love this. Before we get started, just know that I'm not a financial advisor. Anything I say or do is educational purposes only. So if you go smack a old lady, I tell you go smack a old lady for $5 and you do it, yeah, that was your financial decision. You know what I mean? That it has, you know what I'm saying? All right. You get what I'm saying. So with that being said, let's get right into this video. All right, so today we're gonna go over fair value gaps, how you can use fair value gaps to create better high probability trades. And I'm not just talking about fresh fair value gaps. For an example right here. All right, so let's go over this little example. If you guys don't know what a fair value gap is, this is basically a fair value gap from this low of the wick of this candle to the high of the wick of this candle. There was no price action in between this area right here. So this is considered your imbalance, your fair value gap right here that you expect price to reprice to, redeliver to, and potentially rebalance, and you could possibly take a sell in this fair value gap if you're bullish. If you're bearish, all right. So it will look something like this. You know, price would come up to that fair value gap, tap into the fair value gap, and then continue lower. Okay, this isn't considered rebalance. If you have price go through it like this, right, come down and then go back into it again, that's considered rebalance. All right. Now, as well as, let's say price did do this, right? Let's say price went up to this fair value gap right here, and this is what I'm going to teach you guys or show you guys today, right? And price breaks down and goes lower, right? Let's say price goes back up to that fair value gap and we're bullish and price goes through it. You can use this same fair value gap as support to go higher, right? Along with some other type of confluence inside of there, because the algorithm remembers these price points here. Okay, it remembers the top of this gap and the discount of this gap. So the premium and discount of this gap, and also consequent encroachment of this gap. Even though price rebalance and reuse this gap, this same gap can act as a brick wall because it's a balanced price range. All right, so if price comes back into this gap right here, discount or the premium of it, you could be a buyer to continue higher. And it helps with bias as well, because if price closes above that gap, that's better for your buy position, right? Or your buying bias. All right, so we're gonna go over a few examples. If you guys have learned this before, then that's really good. If I don't know if ICT ever taught this, you feel me? Because you feel me, I'm not a mentorship student, I'm not a charter member, I'm not none of that. I learned this through my own personal study, and you know, I'm just bringing it to you guys, you know what I'm saying? So just know that all of this is ICT, right? This is the foundation of ICT. I'm not trying to retool what he's taught. This is just what I found through the foundation of him. All right, and if he's taught this before, good. If he hasn't, well, I'm about to show you guys something that you probably never seen before. All right, or you have seen it, you just never dug into it. Okay, so let's go over Euro AUD. I sent this in my Telegram for you guys to go over it. This is what I said: mark out OF fair value gap on the daily, H4 that price is relatively close to on intraday, and use those arrays as confluence for bias and trade execution. Closes below and above those arrays should help with bias, and prices around those arrays are reactionary. All right, this was a personal study that I found. Boom, you feel me? Best example for study is your AUD daily chart. Actually, all the pairs are really good examples, but this is the one that I kind of back tested and seen. You know, Euro AUD daily chart, sell side draw starting from July 1st after a purge on highs. Do as I stated above. This was the chart right here. You guys had sent a few charts, and I've seen you guys, when you guys marked out your charts, you guys are using arrays on the right side of the curve. You're using fair value gaps, daily fair value gaps on the right side of the curve, which is okay, but I'm gonna give you guys more insight and show you that there's more to this move. Okay, right? So let's go over your AUD. All right, let me go ahead and clear this out real quick. All right, so looking at your AUD had took out buy side liquidity, right? Purged these highs, and now we have a displacement lower, right? So whenever buy side is taken, sell side should potentially be offered, right? So we're looking at sell side liquidity pools for a price to draw down into. So you can see this sell side liquidity pool here, this one, you know what I mean, and even down here as well. All right, so let me do this, boom. All right, so there we go, right? Actually, I can replay it to make it a lot better. All right, so let's mark out the fair value gaps that you guys were missing in your charts or that you haven't seen. All right, you have this one, I'm gonna make it red. You also have this one. Okay. You also have this one. You have an old gap right here that you could use instead of this one, which would probably be way better. You also have a gap here, so I'm gonna mark that one out right there. Now, if you see a gap like this, mark it out instead of like this old fair value gap right here. Mark out this gap, the gaps, right? You can mark out the gap here as well, if you would like. Right, but I'm gonna keep this one right here. All right, so boom, there's our fair value gaps. There's a few on the 4 hour too, but I'm mainly sticking to the daily. As you can see when I'm marking this out, look how much reaction this has, right? Even though it broke through below this, look how it came back up to the premium of that fair value gap and broke down. Look, premium broke down, premium broke down. Once it went back above it, look how it came back down to the discount of that fair value gap. Went up higher, when it even reacted to this one, right? Went above that, it broke right back down to it. You can see how it came back to the discount premium of that fair value gap, went back above, came up to this fair value gap. So you can see how much reaction you're getting from these old fair value gaps. Look, even right here, we broke down. If you were bullish to attack buy side liquidity, once we broke right back above it, you could use it as support ideas to go back above that buy side liquidity pool, right? All right, so since price had purged out this liquidity right here, our first target will be this same fair value gap right here, right? So let's go to the 4 hour. All right, and let's watch price deliver to that fair value gap. All right, so we came back above, rebalance, not rebalance, but redelivered to this fair value gap right here. Had a reaction, now we continue lower, right? Going back down into that fair value gap. Okay, so there we go. We're at that fair value gap. We went right through it. Okay, so what does that say to me? All right, we just took out buy side liquidity, right? We broke through cleanly through this fair value gap. So what do I expect? I expect price to come back into this fair value gap and use this as an area, as a brick wall resistance to continue back lower down to my sell side liquidity pools. Okay, so let's go into the price section real quick. We have an old fair value gap, not an old fair value gap, a fresh fair value gap here, right? So let's mark that out. Okay, you have that, and you also have one right here that's at the premium of this array. So we can mark that out as well because price can reach into that array. So let's mark that out. All right, so boom. So what am I expecting? I'm expecting price to reach up into that fair value gap. All right, so right here we're in New York. This is our daily open right here. Price went above it just a little bit and broke down here. Now, if I'm bearish, right, I would rather buy near at the daily open, close to it, or relatively close to it, right? This is kind of close to that. If I'm bearish right now, I would rather see this hold than us go above here and come into this fair value gap up here, right, with the buy side liquidity inducement, right? I'd rather see this hold here, this fair value gap. So let's go down to the 15-minute time frame and watch price deliver. Okay, so you can see how price came up to the premium of that fair value gap at London close kill zone, and we're breaking down there. All right, so here we go. Okay, let's see what happened on the lower time frames. Let's go to the 3-minute. Okay, we had no shift in deliveries. We do have fair value gaps right here, so we'll just watch price deliver lower. So you can see how price is reacting around that gap. Look how it's coming back to that same fair value gap on the hourly time frame. Look how it uses that, right? We broke down, and now we continue lower, right? So there we go. We reutilize that gap. This is a daily old fair value gap, and look at the reactions around this array, right? So let's go back to the hourly. You see how price delivered down into this fair value gap now, right? So if I'm bearish, I would like to see price break through this gap, and we will reutilize this gap as resistance. All right, so let's watch us deliver down. So you can see that we delivered below that gap, right? We have an old fair value gap right here. Okay, so let's go ahead and mark that old fair value gap out. What are we? We're still bearish because we're expecting price to deliver to sell side liquidity pools, right? Because we took out buy side, we should deliver it to sell side. All right, so as you can see, we go lower. All right, this is the end of our trading day right there. All right, okay, let's go to our daily open, true day open. All right, there's 4 o'clock. Okay, so as you can see right here, right, 6 o'clock, this is our true day open right here. Let's go to the 5-minute. All right, 5-minute time frame, 15-minute time frame, sorry. Our true day is the next candle. Okay, so here's our next candle right here, 6 o'clock. That's true day right there. Daily open price, boom. If we want to be sellers, we want to see price go above that, right, and continue lower, right? So right here, we're building up buy side liquidity. We're above daily open price. True day is finished right here. So during London, we're expecting sells, right? So see, we're breaking down. Here's 8 o'clock. All right, so now we're in London kill zone, right? We have buy side liquidity pools here. Buy side liquidity pool. What I'm gonna expect is price to take out that buy side liquidity pool and come into this fair value, dig into this fair value gap more, and come into the premium of that old daily fair value gap to act as a brick wall to send price lower. Okay, so that's what I'm expecting for London. So let's see what happens. All right, so we take that out there, right? Let's go to the 1 minute. let's see if we have a shift in delivery. Okay, so this low would be considered our shift in delivery right there. All right, we break below that. Now we have this old fair value gap. We want to expect price to come into that old fair value gap and continue lower, at least get back to daily open price or even lower for the day, and even get back down to this discount of that old daily fair value gap. All right, so let's see what happens. Okay, so we broke down some more. We took out another, we have another break of structure, right? This is going to be a higher time frame shift in delivery, maybe on a 5-minute, because we took out liquidity there. All right, look at the displacement lower, took that out. Let's go to the 5-minute, because price may not come back above to this array right here. So you have this old fair value gap right here. We took out, we have another shift in delivery right there, right on the 5-minute, and we have this old fair value gap. All right, so I would rather be a seller here instead of up here, thinking price can get back into high premiums of this dealing range, this new dealing range that we have, right? So there's our 12 pip stop loss. We're expecting what? Price to continue down to at least this old gap right here, and even dig into the sell side liquidity pool there, right? We have a sell side liquidity pool there. We could expect price to get down into that, so that could be like our final TP. We could take partials here, and then final TP could be right there, right? All right, so let's see what price does. Price comes back into the fair value gap, and we have a displacement lower. Okay, so there we go. There's your displacement lower. There's the TP right there. And notice how we use that same daily fair value gap, along with confluence of daily open price, ICT's mentorship model, right? Along with the fair value gap confluence with that. So you can see all the confluence in this trade to make it high probability, right? Okay, let's go back to the hourly time frame, right? You can see how we broke down lower, and that would be our trade for the day, right? So let's continue. Okay, notice how we came back to that same fair value gap, took out highs around New York kill zone. So this is yeah, about 30-45 minutes after New York kill zone. Boom, we broke down lower. Let's see what happened. Okay, so we have another shift in delivery right here. So price went high, broke down, tried to go higher. There's our shift in delivery. Mitigation block would be like right here. This would be your mitigation block there. After price broke below here, look how price redelivered back to this fair value gap right here. So you could be a seller there, right? Because we're reutilizing this same array as a brick wall. Okay, I don't expect price to go back above that because I'm bearish for the day. Now, since we took our first trade, we want to take this trade, but let's see how this will work out, just in case you miss that first trade. All right, back down to what? The discount of that array. So you can see it redelivered back to that discount on that array after we had that shift in delivery right here of that mitigation block. That would be your entry right there, because you wouldn't expect it to come back. Like, it already rebalanced right there. So we continue lower right there. So that could have been your trade there, back to the discount, right? And notice how we reutilize that same array, right? Taking out buy side liquidity there and continue down from there, right? So we continue lower, right? Still reutilizing the same gap on a 15-minute. Let's go to the hourly right here. So you guys are getting what I'm putting down right now, right? See how I used it again right here and broke down. Now that we broke above this gap, I no longer want to be bearish right, until we get back below this gap, right? So let's see what happens. Like, reutilizing that gap, we broke down below it again. Okay, notice how, look, you see how we're reutilizing this gap again along with a fair value gap here, broke down. Okay, we come back above, reutilize the premium of that gap. Notice how, look, notice the reaction. Came back to the discount, went above, came back to the premium again, right? Okay, we broke through it that time. So right now we have a lot of choppiness. I wouldn't even be messing around with this gap right now. All right, so this is where you just sit on your hands, let price do whatever it's gonna do. Notice how we're still playing inside of that same gap. Let's draw it out. And now we break down, right? I think we break down. Okay, we use the premium of that gap again. During New York kill zone, breakdown, we go lower, okay? So now that we broke below this gap right here, right? Okay, we're still bearish, we're still expecting price to deliver down to here, right? I would expect price to use this area as resistance to continue lower, right? So let's go down. Let's see, this was our daily open price right here. Okay, we went above, knocked out a little bit of buy side liquidity, broke down through that gap. So I'll expect this gap to hold, right? So you have a old fair value gap right here. Let's see if price can get up into that and even use this fair value gap right here, right? So look how we use that gap right there. Around what time? London kill zone, London close kill zone. It can still get above this high and come into the premium of it, and also this fair value gap, and then continue lower. So that's what we're waiting for. Okay, so we went above the gap, right? Which I don't want to see, right? But this is way past our trade time, right? So no trade for the day. No trade for the day. We reutilize this old gap right here, and we went above. So I would like to see us get back below these gaps right here. All right, so we have this old fair value gap right here that we're playing inside of right here. Let's see if we can continue lower and get back below these gaps, right? Okay, so we went back below this same gap right here, which is a good sign for us, right? All right, so boom, we went back below this gap. Here's a small fair value gap inside of there with it there, right? And we're expecting price to deliver lower, okay? So let's see what happens. This is end of our trading day. It's coming up. Okay, so we're here in Asian, right? This is Asian now, the start of Asian range. Okay, we come into that same fair value gap, and we get a continuation lower. So there we go, right there. So notice how we use that same gap and continue lower to our sell side liquidity pools, right? So sometimes, yeah, it might go through the gap, right? You need some good confluence. This is way past our trading edge, way past London close kill zone, so we don't trade that, right? We break down right here, Asian, and then we continue lower, right? Okay, we broke through what? This gap here, right? So what do I expect? I expect the same gap to hold and act as a brick wall to continue lower to our sell side liquidity draw, right? Okay, so we took out that low there. So what's next? Next area would be, let me see, let's go to the daily. Next area will be this low, these lows down here, right? So now that we broke through this gap right here for the day, I would expect the next daily candle to create a Judas swing back up into this gap, maybe the discount or the premium, and continue lower, right? So we have more sell side liquidity there, right? We took out this low right here, so we're not worried about that no more. Notice how, look, you see how the wick of this daily candle came into that same fair value gap, old gap right there. Look how they used it here, 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 went above it, they broke below it. Look how they use it right there and to continue lower, right? Now that we broke through this gap, let's see what happens. All right, so 15-minute time frame, let's go to it. See if we can find any confluence. We have buy side liquidity right here. Let's go to the 30 minutes, should be like a fair value gap inside of there. Okay, so we have this small fair value gap right here that price could come into. After it takes out this high, it can continue lower, just purge and revert. All right, so let's see what happens. All right, okay, so boom, right, we come into this gap right here. We kind of broke above this fair value gap, so it'd be better to wait for price to like go back below it and then use it as resistance, right? It might be a gap that I'm missing though. Okay, so you have this old hourly gap as well. You also have the premium up here, so it could get up to that and continue lower. We'll see what happens, right? Okay, so boom. Okay, so we broke down below that array. I necessarily wouldn't, I don't see anything like I would trade, to be honest, besides it coming back to the same fair value gap right here and then continuing lower, right? This same gap. So you can see it possibly come up into that and then continue lower, right? Okay, so you can see how it's using the discount of that gap as a resistance. So we could possibly see lower prices instead of it going up higher. We'll see. Okay, it's using the gap again, and then there's our breakdown, right? So you guys get what's going on. You see how it's using it right here. We came up, remember what I said with the daily candle? You will want to see the next daily candle come into that gap and then continue lower, acts as a brick wall, right? So you can see it did that. Now we're continuing lower. Okay, let's go over a GU trade that I took today during London Open, and show you guys how I'm using the same gap as well. And you can use future gaps same way, right? Instead of old fair value gaps, right? So let's go to the 30-minute time frame. Okay, let's look what happened here, right? So we have this old fair value gap here that price came to rebalance, redeliver to, right? After it redelivered to this old gap right here and broke down, right, you can see that you have this up candle that there's no price action in between. Everything is kind of like rebalanced besides here, but this is like discount of this whole from the top to the bottom. This is not really like premium, right? So I want to buy at a premium, right? This is the only area that I like for us to come back into this gap right here and continue lower, right? Okay, we're also inside of that old fair value gap as well. So let's go to the 15-minute time frame. You can see that price around 8 o'clock, which is like London open for me, London kill zone, right? Open, goes up into that order block, and then we have a breakdown and a shift in delivery. All right. Okay, after that happens right here, so you can see this is our daily open. This red line is our daily open price. If I want to be a seller, I want to see price go above that. It goes above that, creates a Judas swing, goes lower, right? Shift in delivery, right? We have a 15-minute fair value gap right here, okay? With these two arrays, okay? So I'm expecting price to come back into that array and continue lower, but I didn't put my sell limit in this gap right here. I put my sell limit at this red line right here, and the reason why I did that is because that's the discount of that fair value gap, right? So I'm expecting price to use this as a brick wall to continue lower because I don't expect price to go above here, right? All right, so I took my sell limit here. So let's go down to the 1-minute time frame just to get in more detail. All right, so boom, right? We have an old 1 minute fair value gap as well, right? Along with this, here's our 15-minute fair value gap. You could put your sell limit there, but I put my sell limit here because I wanted to see price come and tap into that same old discount, that same fair value gap. I put my stops above here, right? You could put it above here to be aggressive, but I didn't want to keep it that tight, right? And then my target, my first TP was gonna be at a 1 to 1.5 at this fair value gap down here, right? That was gonna be the partials, and then I was gonna aim lower, right? But you can see like it didn't get down to that. It came back, hit me out at break even, and then I called it a day right there. But you can see how I utilize those gaps as confluence, right, for my trades and for my bias, right? Notice how this same 15-minute candle right here, you see how it delivered to that fair value gap and then continue lower as well. And look, we broke above it. Look how we use it as support right there. Support to go higher, support to go higher, right? Acts as a brick wall, right? Look how we came back to the premium of that gap. Look how we continue lower, right? Look how we came into the discount of that gap. Look at the reaction, right? Look at the reaction here, right? Went up and we broke right through that gap again, okay? Watch what happens. Watch what happens. All right. Here's that same 15-minute fair value gap right there. Let's say you miss this trade right here where they came into the premium, had a shift in delivery, came into the fair value gap and went lower, right? You have this one right here. Okay, if you're bearish, you expect this to act as a brick wall. Here's the same 15-minute fair value gap. Look, it's already rebalanced, right? We played in it already. A lot of people would just disregard that. We cut through candles, right? Cut through candles, boom. Use it as resistance. Look, the same fair value gap right here, and that the discount of our daily fair value gap right here. Look how it uses. Look at the bodies. Look how it continues lower. It didn't come up to this fair value gap. You could wait for it to come up into there if you would like, but you put your sell limit there, right? And expect price to react off of there and put your stops above, like around here, right? And expect price to deliver lower to sell side liquidity draws, right? And there you go. That's your trade right there. You know what I mean? So I hope you guys enjoyed this video. Please do your own study on this. If you guys enjoyed this video, please hit that like button. And you know, I hope you guys have a good rest of your week. I'll see you guys in the next one. Peace. I'm out.